Hello, everybody. My name is Justin, Business Development Manager here at Fullerton Markets, bringing to you a special class on what moves the Forex market and/or Forex prices. All right. So basically, we will be tackling four factors that affect price movement. Now, some of you joining us have traded Forex before. All right. And I'm sure you guys have, at the back of your mind, have always thought, what actually moves the prices? All right. Because we can see on the chart, we can see on the MT4 that prices are going up, prices are going down. But how do we actually know what are the prime movers, right? What is responsible for this movement? Because if we know what are the movers, we can then better position ourselves when we actually start trading. So without further ado, let me share with you the first, all right? The first thing that moves Forex prices would be economic events, all right? Basically things that happen within an economy, all right? A currency may rise or fall because of the economic data released by the country, all right? Economic data will affect a currency, all right? Why, all right? That's a question we all want to ask. Why would economic data be relevant? Well, simply because economic data tells you how well a country or an economy is performing, all right? If you know how well a country is performing, then you would know if the country is strengthening or weakening, all right? Now, if you can see from the data that a country is strengthening, then of course you might want to buy more of that currency pair. However, if you see that it is currently weakening, all right, over a period of time, you might want to start trading against that currency pair, all right? So this is why economic data is very important, all right? Now, the next question is, well, what are some of the economic data that we should look out for? Some of the more important ones, right? We have the GDP, or the gross domestic product within a country. We have the retail sales, or how much sales are being generated within a country by its consumers, followed by the NFP, or the non-farm payroll. Basically, this tallies all employment in the US, excluding the farming sector, all right? We also have the unemployment rate, how many people are not employed this month versus last month. We have the FOMC, we have the consumer price index, and there are quite a lot more, all right? Knowing which ones are important, we'll get to that later, all right? So these economic data, they don't draw the entire picture of an economy, but they are key factors that tell you if the economy is doing well, all right? Now, for each and every economy that you were looking at, each and every country, they may not have the same economic data, all right? For example, you have Australia, you have New Zealand, they have, they may not have the same economic data movers as, for example, the US. For example, milk prices would affect, let's say, Australia or New Zealand more than it would the US. So it really pays to know what are the economic movers of the economy that you were looking at, or whatever country that you were looking at, all right? So let's move on. To actually see economic data, we have to use the economic calendar. So before this, I'm sure you guys were thinking, maybe I have to get a subscription to, let's say, Bloomberg, or do I have to watch Bloomberg, or CNN, CNBC, all of these places for economic data? Well, the answer is you could. You could look at these places. However, thanks to the internet and thanks to a website called Forex Factory and investing.com, we can then have a look at some key economic data free of charge. And at the, it's easily accessible as long as you have internet connection, right? This I'm showing you right now is the economic calendar for Forex Factory. It's actually quite easy to use. As you can see here, on the far left, we have the date, it says January 30. We have the time, we have the currency, we have the impact, we have whatever the economic data or whatever is going to be happening for that day and that time. And we can actually see if it's a mover of the currency. As you can see here, it's a dark red folder, meaning it is pretty big news that will move the markets, all right? Aside from that, you can see here, there's the actual forecast and the previous, all right? Now, what these tell you is, the actual is what the report actually is. The forecast is what the experts think the numbers will be, and the previous tells you last month or the last period report. All right. Now, this important information can help you decide whether or not a currency or a country is doing well. Let's move on. Here's an example for retail sales. All right. It says Canada retail sales rose 0.9% in November versus the 0.4% expected. Retail sales in Canada increased more than expected in November. All right. Just from this, this news headline, this article, we can already see a few important pieces of information, such as, all right, the, the retail sales in Canada rose, all right? And second, it did better than the expected, meaning this is good news for Canada, okay? This is good news for whatever pair you are, this is good news if you're trading the Canadian dollar versus whatever currency pair, all right? There will be some movement thanks to this, this information that we have received, all right? So this is how economic data plays a part. We now know that retail sales rose 0.9% in November, and it did even better than what the experts were thinking it would be. This will lead to volatility and is usually positive for whatever currency pair it is attached to, in this case, Canada. So if, for example, you are trading the Canadian dollar versus the Japanese yen, you might want to start buying more Canadian dollars or enter a long position for the CAD JPY. If you are trading, let's say USD CAD, this might be a sign for you to actually short. Just to give you guys an example of how we can actually use economic data in our trading. Clear so far? Let's move on. Gross domestic product, all right? New Zealand's economic growth picks up easing rate cut bets, all right? Just from the headline, we can see a few things, all right? New Zealand's economy is doing much better, and the belief that there might be some rate cuts is lessened, all right? Easing rate cut bets. Basically, the chances of a rate cut are being lowered, all right? Now, when you interpret this information, it will help you decide whether or not you want to, buy the New Zealand, if you want to buy the NZD or if you want to sell it, all right? This information will help you. Basically, from this headline itself, we can see that the NZD is picking up. So if you're trading anything against the NZD, you know where to position yourself, all right? This is why economic data, once again, is quite important for you and I as a trader. Let's move on. We have the NFP, all right? The dollar gains broadly after robust US payrolls, all right? The greenback ended the day higher against a majority of its peers after the release of upbeat US jobs report, but dropped against the yen as the coronavirus fears triggered risk-averse buying in JPY, all right? So based on this, we have quite a lot of information. The first being, the dollar strengthened because of really good US payrolls report, all right? Second, it did better than most currency pairs except for the Japanese yen. And third, we can see here that people bought the Japanese yen because they want to invest in risk-averse currencies such as the Japanese yen, all right? The Japanese yen is a safe haven currency as well as the US. But in this case, people chose to, buy more Japanese yen, basically. There are quite a few more safe haven currencies out there. There's the Swiss franc, and you can also count the dollar in. So this is how economic data is important. It helps us position ourselves better. Let me give you guys an example. If, for example, you are trading the USD CAD, all right? Based on your technical analysis, the Canadian dollar should be strengthening, yes, and USD CAD should be going down based on your technical analysis. Here's the thing. Thanks to this new information that you just received about the NFP, you can then decide that maybe my short bet on the USD CAD is not correct after all. Maybe I would like to look at a potential long position or a potential buy trade, all right? Now, this is just another benefit to having both technical and fundamental analysis in your trading. Okay, so let us move on. The second thing that moves the Forex market is central banks, all right? Central banks create policies that may lead to currency movements, all right? There are a lot of central banks out there, and not all of them will affect the Forex markets. Usually the major central banks play a big role, and people are always looking at them, all right? People are always ready to hear statements from central banks, all right? Let's move on. Here's an example. Dollar gains versus euro as ECB holds policy steady, launches review. All right. Because of, they held the policy steady. They did not do anything. They did not, cut rates or whatever. The dollar gained against the euro simply based on the monetary policy released by the ECB. All right. Based on what they decided to do, the dollar strengthened against them. All right, let's have a few more examples. Bank of Canada opens doors to rate cut on persistent slowdown. All right, Bank of Canada is cutting rates. Now, you guys have more information. All right, you can see how this will affect whatever currency pair you are trading. All right, central bank leaves benchmark rate at 1.75% for the 10th meeting. There is a reason for this. All right. Now you can interpret this. But usually when people come out with these reports, there is already an interpretation. However, it is prudent for you to read a lot to familiarize yourself with some terms that they use. All right, so that you don't accidentally, go in the opposite direction. Moving on. Basically, when it comes to interest rates, all right, if the interest rate in a certain country or from a central bank goes down, the currency will also go down. If the interest rates are, set to increase, the currency will also increase. All right. Interest rates go down, currency go down. Interest rates go up, currency go up. Okay. Clear so far? Let us move on. All right. The US dollar dips as traders brace for more Fed rate cuts. Okay. Now let's dissect this for a second. All right, there's a few things that we already know. The first being the dollar dips. Why? Because traders, the second reason, the traders are bracing for more Fed rate cuts. All right, more Fed rate cuts. And third, there is a large potential for Fed rate cuts. Okay, those are the three things that we have, we have taken from this article. All right. So here's the thing. When you are trading, right? We we may not be as, how should I say, as savvy as some of these market analysts, right? But they do us a great favor by writing articles like this. Okay. Now, I don't have to wait around. I don't have to look at a whole lot of data from the Federal Reserve to know that they might possibly cut rates, right? I just have to look up a few articles prepared by the market analysts, okay? So this will help me in my trading, no doubt, all right? If you were looking to go long on any currency pair, the US dollar is being traded against, you might want to put that on hold simply because you now have more information to guide your trading. Life is so much easier because quite a lot of people out there believe that you only need to use technical analysis. Well, my friends, I'm here to tell you that yes, technical analysis plays a big part. Fundamental analysis plays an equally large part when it comes to successful Forex trading. So we have to use both. All right, let us move on. Bank of Canada cuts key rate by 0.5 percentage point. All right, it cut the interest rate by 0.5 percentage point, so the Canadian dollar should be going down. All right, if you were trading, for example, USD CAD and you saw this, you might want to go long. If you're trading CAD JPY, you might want to go short. Okay, simple as that. This is why it is very prudent for us to also read a lot, websites such as the Wall Street Journal, CNBC, CNN, they're all available. There are quite a lot of apps on your phone that you guys can take advantage of. right? There are quite a lot of news outlets that are ready for you. All you have to do is look them up and do a bit of reading. All right, it's very important for us to be, familiar with what is happening in the world. How can we be forex traders if we do not study what is happening all over the world? All right, let's move on. The third thing that could affect forex prices would be geopolitical events. Yes, ladies and gentlemen, geopolitical events, or basically events between countries which are affecting the market. Now, think about all of the things. Think about your day-to-day life. All right, think about your day-to-day life, and we may not be directly affected if, for example, your country decides to open trading relations with another country. You might not necessarily feel it immediately, but it could be a good thing for a lot of major industries in your country. You might be exporting more. You might be bringing more money. You might be bringing more business to your country. All right. This is an example of a geopolitical event. Another event would be, for example, war. All right. War between two countries will, make the waters a bit, turbulent, and it might affect how people, people might not want to be in your country. Might affect tourism. There might not be any money coming into the country. There might not be any people investing in your country because of the turmoil. Stuff like this, geopolitical events, or how one country and another interact, will inevitably affect forex prices. All right. US China investments flow to 5-year low amid escalating trade war. Here's an example. All right. The USDJPY fell 370 pips after US slapped China with additional $300 billion worth of tariffs. All right. So the first question is, why did the USDJPY fall after the US slapped China with the tariffs? Well, people might want to opt out of the US dollar in exchange for the Japanese yen, which would be seen as safer. It is a safe haven currency, and people might want to, ride out the turbulent waves and stick to the Japanese yen. All right. That's why there was a drop of 370 pips, because people thought that the Japanese yen would be a much better bet. Here's just an example of a geopolitical event that did affect forex prices. All right. Another geopolitical event would be natural calamities and or disasters. All right. Things that affect a country, such as tsunamis, volcanic eruptions, coronavirus, to name a few. All right. Earthquakes, typhoons, all of these, especially if they do a lot of damage, they will affect. When it's a disaster, the currency of the country will be affected. All right. World Health Organization declares the coronavirus outbreak a global pandemic, meaning the entire world will be affected, and everybody should be well aware and should take care. All right. The AUDUSD fell 1,000 pips in 8 days after WHO announced COVID-19 pandemic. Now, do take note that this does not necessarily mean that there was COVID in Australia. All right. But what it does tell you is that people invested in safe haven currencies such as the USD. All right. Earlier, we had another example, USDJPY, where the Japanese yen was the one to increase. Here we have the USD appreciating against Australian dollar since people bought more USD comparison. Okay. Geopolitical events are a big mover and will inevitably affect forex prices. So it's, it pays for people to be aware of what is happening. All right. It couldn't hurt either. It couldn't hurt to be aware. And I'm sure there will be many more events in the future that will affect. For example, tsunami hitting Japan will move the markets. All right. This happens. This has happened quite a few times in history, and it really does show that it affects the currency. All right. Let's move on. Finally, we will close with market transactions. What are market transactions? Well, basically, market transactions meaning the day-to-day trading. Okay. When the demand is greater than its supply, the currency will rise. When the demand for a currency is greater than the supply, it will rise. Okay? Inversely, if the demand is lesser than its supply, the currency will fall. All right? When the demand is less than its supply, the currency will fall. Now, what are some other examples of market transactions? Well, let's say the major players in the forex markets. Let's say they all decide to enter a short position on a certain currency, or they start buying one currency heavily, foregoing the other. This will inevitably reflect in their trades, their positions, and it will move forex prices. All right. Now, ladies and gentlemen, these are the four things that mainly affect forex price movements. And I'd like to thank you all for joining me. I hope you guys check out our other videos and our other classes. That's it for me. My name's Justin Bernabe, Business Development Manager here at Fullerton Markets. Thank you all and goodbye.